Have you ever wondered why one earnings report can send a stock soaring, while another can erase months of gains in just one day? Well, Veritone's upcoming Q2 earnings could be one of those game-changing moments. If you're thinking about buying VERI, holding your shares, or selling before earnings, don't make a move just yet, because one number and one statement from management could completely change the direction of this stock. Let's dive in. Before we begin, keep in mind that these are not the official Q2 results. This is an earnings preview based on the latest company updates, analyst expectations, and Veritone's overall business outlook. Right now, Wall Street expects Veritone to report another quarterly loss, with revenue roughly in line with recent estimates. At first glance, that doesn't sound exciting. But here's where things get interesting. The market isn't expecting perfection. What investors really want is proof that the company is moving in the right direction. Last quarter, Veritone surprised analysts with better than expected earnings per share. However, revenue came in weaker than many investors hoped. That's one of the main reasons the stock struggled. Now the big question is, can management finally show that revenue growth is starting to accelerate? If the answer is yes, this stock could react much more positively than many people expect. The first thing investors will watch is revenue. Even a small revenue beat could change investor sentiment because Wall Street wants evidence that demand for Veritone's AI solutions is improving. The second thing everyone will focus on is the company's AI software business. This is where Veritone believes its biggest future opportunity exists. If software subscriptions continue growing, it could strengthen the long-term investment story, but that's not even the biggest catalyst. Because there's one thing that often matters, more than the earnings numbers themselves, and that's exactly what we'll talk about next. That one thing is guidance. Sometimes a company reports decent earnings, but management gives weak guidance. When that happens, the stock can still fall sharply. On the other hand, even if earnings are only average, strong guidance for the rest of the year can completely change investor confidence. That's why smart investors don't just read the headlines, they also listen carefully to what management says during the earnings call. Now let's look at both possible scenarios. The bullish case is simple. If Veritone beats revenue expectations, shows improving margins, and management sounds confident about future AI growth, the stock could attract fresh buying interest. Small-cap AI stocks are known for making very big moves after positive surprises. But there's also a bearish scenario. If revenue misses expectations again, or management lowers guidance, investors could lose confidence, leading to another wave of selling. So what's my opinion? Personally, I think existing investors should consider holding until earnings if they understand the risks that come with small AI stocks. For new investors, waiting for the actual earnings report may be the safer choice. That way, you'll have real numbers instead of speculation. As for my price outlook, if Veritone delivers a strong quarter and gives optimistic guidance, I believe the stock could move toward the $2 to $3 range over the coming months. If results are average, it may continue trading sideways, and if earnings disappoint, further downside is definitely possible. Of course, this is only my personal opinion and not financial advice. Now I want to hear from you. Do you think Veritone will beat expectations? Or will investors be disappointed once again? Let me know your prediction in the comments. And if you enjoy honest stock analysis with no unnecessary hype, don't forget to like this video, subscribe to the channel, and turn on notifications because I'll cover the actual earnings report as soon as it's released. Thanks for watching, and I'll see you in the next video.